Hey, what's up, BobMortgage Nation? All right, crazy busy week this week and nobody was available to ask me any questions, but you're in for a treat for this 23rd episode of the Ask Bob Mortgage Show. I got Kelly Sindler with We Connect DFW Compass Real Estate asking me questions so I can get you some answers. You have questions, I have answers. Great question. What I want to be able to do is give you world life experiences that I've been going through.
Hi, this is Kelly Sindler with Compass Real Estate and the We Connect DFW team, and I'm here with Bob Johnson, aka Bob Mortgage, my #1 mortgage guy, bringing you episode 1 of Mortgage Myths Debunked. Guys, these are questions that I get out in the field every day, common questions. I think a lot of myths on the whole home loan process. And so we're just going to get started. I'm going to throw some questions at you.
I love the name, though. I mean,
say it 3 times fast.
I can't. Mortgage Myths Debunked.
There you go.
All right, what do we got?
Okay, so first question I hear all the time, what can I expect going through the home loan process? What kind of documents do I need?
Yeah, I mean, it's a big one, especially for somebody that's never gone through it, or even if you've kind of like gone through it maybe over the last, maybe it was 5-7 years ago, and you haven't experienced the new version of Mortgage 101 after Dodd-Frank. So, I mean, it's a little different. But really, the thing that we try to make it is really simple and easy, and it starts with a conversation. A lot of people will tell you, hey, go out there and apply online. That's fine, but those online systems really won't be able to give you kind of the feel and experience that you're looking for. So I love to have, a 10 to 15 minute conversation with a client. And what we're really gonna go through right there is building a profile. Where have you lived and worked for the last 2 years? Okay, we wanna look at income that you're currently making, right? We wanna talk about your assets, how much money do you have? And we wanna look at credit. Okay, those are the main things that we want to talk about. So where you've lived and worked for the last 2 years, income, assets, and we wanna look at credit. Right then and there, that's about a 15-minute conversation. Okay. And at that point, we can actually qualify you, like pre-qualify you, right? Because that's a pre-qualification. It's just me asking some questions, you giving me the answers, and hey, you're pre-qualified for a particular sales price and loan amount for your down payment and everything.
You said 15 minutes.
It can do it, yeah, we can get that done in 15 minutes, okay? Now, from there, what we have to do is a verification of process, kind of like trust and verify. That's what I do with my daughters, right? Trust and verify. Okay.
Provide documents.
Yes. All right, now I want you to send me all the items to back up that conversation. Okay. So let's take a look at your pay stubs, okay? Let's take a look at your W-2s or your tax returns. Let's look at your bank statements that, you say where you have your money. And then at that point, since it's verified, now we can move you to that pre-approved status, okay? Now, all of this, okay, can take place, that pre-qualification can take place in 15 minutes. Guys, if we do that and get you the needs list, which we will that day, and you get them back to us that night, within 48 hours, we'll have you fully pre-approved and out looking for a home. And we do this every day, right? So I know what's gonna happen. You're gonna get us in contact with a client on Monday or Tuesday, right? We need and want to have them pre-approved by Friday because I want you guys out there and you're gonna fall in love with the perfect house and you're gonna wanna write a contract. I want you to be confident that you're pre-approved, that you could actually execute on that contract, right? So this could happen within 48 hours.
Awesome, 48 hours. So it doesn't take like a month,
oh my gosh, no guys. It's
weeks.
It is a simple 15-minute conversation, and I'll tell you, there's always a yes door and a maybe door. There's never a no door. So I want to bring down that barrier right now. Never have any fear of having a conversation with us. I mean, we're here to guide you through the process to make sure you know exactly how easy it is to buy. And if you're not ready, okay, I don't ever say no. It's just not now, and here's the plan, okay, that you need to be on to buy. Okay, and we'll set that plan up, whether that's in 3 months, 12 months, or 36 months.
Yeah.
Right? We want to make sure that you know exactly what you need to be doing to buy a house.
I think that's so important. So thank you.
Yeah, absolutely.
And then how do they know when to lock in a rate?
Okay, so that's a great question. So the rate itself, so let's say you go out there, we have you pre-approved by Friday. you're out there on Saturday, you found this perfect home. Love it, it fits, everything's right. You're going to write a contract. Contract gets signed by you, the buyers and the sellers. Well, when we get that contract that weekend on Monday morning when the market's open, right, we'll look at the interest rates and we'll make a determination whether we should lock or float the interest rate.
Okay.
Okay. Now, I provide a significant amount of guidance on whether they should lock or float. You guys can follow me on Facebook or Instagram at BobMortgage, and you'll start to see all the content that I put out around interest rates and whether my lock or float position is changing, because I do make recommendations every week. And what we're looking at is, what is the bond market doing? Okay, because the bond market is what impacts interest rates, okay, the mortgage bond markets, and it's a lot about what's happening from the global standpoint, economically, everything. And so we have to watch all those items, and we'll make a determination to say, hey, we quoted you 4.25, okay? Basically what we're looking at is you're closing in the next 30 days. There's a potential risk of that going to 4.375 or 4.5. Let's go ahead and lock it in at 4.25 once you get that contract and you're secure and safe, and you'll never have to worry about whether the market is moving at that point. I may make a recommendation, though, sometimes to float the interest rate, because I'm seeing such positive movement in the bond market that may allow us to then lock in that interest rate at 4.125, saving the client thousands of dollars over the course of that 30-year mortgage.
That's really key.
Yeah. Yep.
Awesome. So speaking about the pre-approval process, you know, and this is, I think, a common fear that I hear all the time. Do I have to have perfect credit to buy a home? Okay,
absolutely not. That is one of there's two big ones, right? And that's one of the big questions people have, and they ask a lot is, do I have to have this perfect credit? And you don't, okay? First off, let's understand you have 3 credit scores, okay? Experian, Equifax, and TransUnion, okay? The 3 credit agencies that we look at. Now, as mortgage lenders, we take the middle score.
Okay.
Okay, not the average, we take the middle. So we throw out the high, we throw out the low, and we use the middle credit score. Now here's the deal. If you have 2 borrowers buying on the same loan, it's the lowest middle score of the 2.
Okay.
So if the wife has 700, the husband has 480, well, we got to take the 480.
Okay.
Okay, so it's the lowest middle of the 2 borrowers, okay? So we're going to look at that, and here's how credit scoring is working as it relates to mortgages. Most people think that perfect credit is going to be like 720 or 740 for a mortgage, right? That's what they tell you perfect credit is. And that's what mainstream media will tell you as well. The reality is, for a conventional loan, you only need to have a 620 mid credit score, okay? For FHA, with a minimum of 3.5% down, all you need is 580 middle credit score. Okay, you can go down to 530 on FHA as long as you put 10% down.
Wow.
Okay, VA for your veterans out there, 600 on a mid credit score, and then USDA, which is kind of the outer lying areas, that's 640. Wow. So, guys, it's 620, 580 is what we're typically seeing. That, by any stretch, that's not perfect credit, but it is good enough to get you a great loan with as little as 3% down on a conventional loan, no money down on VA or USDA, and 3.5% on FHA. Okay?
That's awesome.
And just so you know this, guys, if you're below that score, there's things that we will do to help you get above that. Okay, because once I have the credit report, I can look and say, if we pay down certain balances to a certain percentage, it'll increase the credit score by 20 or 30 points. Yeah. Things like that. Pay off this debt or pay down that collection or something. You know, we'll look at those items, and we'll be able to give them a plan to say, do these 1, 2, or 3 things, and the score is going to go up. And this is how long it'll take, and then you're buying a home.
I think that's so important, to not just have an answer, but a plan. So it's huge.
Well, hope is not a plan.
Right.
Hope is not a plan, guys. So if you want a plan, you got to get with Kelly. Kelly will get you to me, and then we'll sit down and go through that with you. And if you don't want to come in and sit down, that's perfectly fine. We'll do everything over the phone. I'll even, Skype call my clients, and we'll go through that and make sure that you understand exactly what you need to be doing.
Awesome. That's awesome. And one last question I have for you in this episode. do I have to have 20% down to buy a home? I hear this all the time, people thinking that they have to have all this money saved up, meaning like $100,000 home, I need $20,000 just to buy that home.
I know. Well, if you listen to mainstream media, and this is what's happening, because they're coming to you, they're listening somewhere, they're coming to you and saying, do I need 20%? No, you don't. Absolutely not. We kind of talked about it. I mean, conventional will go to 3%. So that $100,000 home, $3,000 is the down payment. Now, there's going to be some closing costs and things like that, but you look at the down payment itself, which is what people get focused on, 3% on a conventional. 3.5% on FHA, that's $3,500. Okay? But let's even say you don't have that much money. Okay? And here's what we get into, guys. We have a lot of first-time home buyers that are making the income to qualify for the house that they want, right? The monthly payments. They just haven't had time yet to save for the down payment.
Right.
And sometimes they've saved for what they want to look at as a down payment, but then that takes all their money.
Yes.
Right?
Right.
And so we look for programs and ways to help get these individuals into a home with little to no money out of pocket, meaning there's great, amazing programs in the state of Texas that will cover, they're called grant programs, that'll cover your down payment and in some cases, all your closing costs. Okay? I happen to be the #1 lender in the state of Texas for these grant programs, and we use them every single day. And it is not necessarily just for people that have no money. It's for people that maybe have money, but it's the best strategy for them. Guys, that's what we look at, the best strategy for you, and we're going to help cover the down payment and the closing costs. So typically you could be into a home, I mean, we've gotten people into a home for no money. They're getting their earnest money back, right? So
that's nice to get a check cut
back. You
do
not need 20% down to buy a house. You can buy a house with absolutely no money or very little money out of pocket.
That's awesome. And it's important, guys, to work with a mortgage lender that has experience in those programs if you're going to do the down payment, so it's work you through the process really smooth.
Yeah, and we'll step you through it, guys. I mean, that's part of what we do every single day is make sure, I mean, I understand trust has to be earned, and we earn it through transparency as it relates to numbers. And I want to be very transparent with you, put that information out so that we can lay out, one program versus another program side by side and decide which one gives you the lowest total cost of ownership, which one's delivering you the best loan with the best options.
Great. Well, thank you. This was very informative.
Hey, episode 1, we did it. We did it. Yeah.
Awesome. I hope you guys got a lot out of this episode, and stay tuned for more episodes.
Mortgage Myths Debunked. All right. Take care, guys.
Bye.